Hey, everybody. Welcome to the Loan Officers Playbook Podcast, the podcast where we talk to actual loan officers making an impact in the field. Today, we have Jordyn Tyler on the podcast. Jordyn Tyler is a loan officer, and I'm super excited to have a conversation with him today. Welcome, Jordyn.
Thank you. Nice to be here.
Yes. Jordyn, I looked at your profile, and it looks like you have been involved in quite a lot of things, from insurance to mortgage lending. Can you tell me a little bit about your story and how you got started?
Yeah, so, since I was about 16, I had a job. I actually installed in-ground sprinkling systems, manual labor. Was getting sick of that. I started getting older and I realized I didn't want to be working outside for the rest of my life. So I actually read Rich Dad, Poor Dad by Robert Kiyosaki. He talked about, residual income, passive income. So I got into insurance sales because of the residual income. I was attracted to that. I worked at Farmers Insurance as an agent for a few years there. Started looking for something different. I actually was trying to buy a house, and I was having issues because of the commission income and the way your income is calculated. So I started looking for a different job. I wanted something more stable where I could, have a solid income and buy a home. I actually ended up going completely the opposite direction and became a loan officer, and it's all commission. But it's worked out well. I've got a house since then. I've always been, attracted to real estate and interested in that and passive income and appreciation, building some equity. So it was kind of a natural fit. I had some sales experience. I interviewed at a couple places and landed here at Heartland. It's local in Grand Rapids. I've grown up here my whole life. So I think it's the right fit for me, and I see myself being here for a long time.
Right. So you've always been involved in sales since you were 16?
More or less. I mean, I did a lot of manual labor, and then I kind of worked my way up and was what they call a foreman. So I would, sell or kind of quote jobs and things like that. So, I got some experience from a young age and then kind of continued up the ladder as far as sales.
Congratulations. Congrats.
Thank you.
Yeah. So I'm curious, in the transition from wanting to buy a house and then seeing a problem in that process and then getting into the industry as a loan officer. So you were a customer and now you became the professional. Not a whole lot of people have that thinking. Some people would think about, like if you're driving and then you see the road signs are a bit off, you don't want to be like a road sign maker or something like that, right? So what particularly attracted you into lending?
Well, to begin with, I'm just a do-it-myself kind of guy. Like, I work out in my car, work on the house, I work outside, so I do things myself. And in the lending process, trying to understand why I couldn't be approved for a home, I had been working for years. I had the down payment, I had all the closing costs. I'm like, I don't get it. I have a job. I have a work history. I wasn't understanding. So doing some digging into that kind of got me interested in exactly how the lending side of things worked. Right. Like I said, I was already doing insurance, so I was familiar with sales. And then I started looking at mortgage brokers because a broker sometimes has options that a bank or a credit union doesn't have. So maybe they could have a program that would, work for me.
Your sales background help you into transitioning to be a loan officer?
Definitely, more so the insurance sales, just because you're kind of selling a product that isn't tangible. It's it's insurance and mortgages are both products that aren't physical. It's just an idea. It's numbers. So I think those kind of relate as far as selling the product more than like a physical piece of merchandise. So it definitely carried over well, talking to customers and explaining them, educating them. Both of those are similar. So definitely some transferable skills.
What are some of the major trends that you're seeing in the industry so far?
In my experience, it's probably partially because I'm newer to the industry too. So working with, borrowers who don't have a ton of cash and that they're buying their first home. They're trying to save up for that down payment and closing costs. That seems to be the biggest hurdle for first-time buyers. It looks like there is, some down payment assistance programs, and I don't know if you saw Kamala Harris was just talking about, doing $25,000 for first-time home buyers. I don't know if that'll come to fruition, but there is a realization in the market that that's what people are struggling with. So I think that's going to be coming down the pipeline in one form or another. And then it also seems that rates are starting to trend down. So, that will allow people to afford more. More people will be qualified. But with the same amount of inventory, I think prices are also going to go up. So I'm not sure if you heard the saying before, marry the house, date the rate. So you buy the house you want, even if the rate's high, you can always refinance later. So that's what I tell a lot of clients.
I think like the American dream, like it can be coined into owning a home, and like loan officers are the conduits to the American dream, I would say. And how do you find yourself as a loan officer, like assisting these customers, whether it's like refinancing, whether it's like getting a down payment, a payment plan, closing costs, helping people just get into all these programs. How do you find that process?
So I tailor it to each client. So every client's different. Some guys have a ton of money and great credit, and they just need to get pre-approved. They already have a realtor they want to work with. They're good to go. You set them up with the pre-approval, and they buy a house. Some people need to work on credit. They need to save money. So you give them some advice on how to do that. Follow up with them. It's more of a longer term thing. Or some people, you just look at multiple programs based on what they have, what's going to be the best fit. So it really depends on each client. They're going to have a different journey and a different path.
Right.
So it all kind of depends. That's where our specialty is. We're educated on the process and what's going to be the right fit for them. A lot of people, they think FHA, it's a first-time home buyer's loan. That's a common misconception. An FHA loan, anyone can do. You don't have to be a first-time home buyer.
Right. And like when we're talking to like each of these clients, I think the sales background just helps because as you get to create relationships, it's not like you send out one email and then that's over. It's not very transactional. Sometimes like when you talk to these people, you try to create a relationship, not only with them, but maybe with their families or,
Right.
like a generational relationship. Can you talk a little bit about that?
Yeah, absolutely. I mean, a lot of the business I do is referral based and, people I've worked with in the past, you end up following up those clients. So for me personally, every 6 months, I'm following up with that client, looking at where their mortgage is at now, what rate do they have, has the market moved in their favor? If so, and it makes sense to refinance, I'm going to reach out. I'm going to reach out regardless every 6 months and just, touch base. Is there anything I can do for you? How's it going? And then if I, notice that rates have come down and they could see a benefit from refinancing, I'm going to let them know, say, hey, here's some numbers. Let's get together. But a lot of the time, my business, I try to do face-to-face. So I like to sit down with people. I'll go to their house, sit down at the kitchen table. You complete their loan and then they're like, oh, my brother actually is looking for a home. And so then, that turns into another client and just kind of keep building that network. Obviously, social media too. Every time I have a closing, I try to take pictures and post on social media, share that.
Do you see that as like something other loan officers are doing, or is it just you?
Most of the time, when I go to every closing as well. So a lot of people like I don't want to name names, but let's say Rocket Mortgage. They're not going to sit down with you. You know what I mean? It's going to be over the phone. It's going to be email. We like to sit down with people, and then I go to every closing I can possibly go to. I'm going to go to the closing table, be there, celebrate as they sign their documents and get the keys. And most of the time, the realtor will be there as well. And about 9 times out of 10, they'll say, oh, I've never had a loan officer come to the closing.
Yeah, that's very impressive. Like you not only show them that it's transactional, you show them that you really care about them.
It's because, with any sales, if people think you're just out to get money or, take advantage of them, obviously they're not going to want to work with you. If you can show them like, hey, I actually care. I want what's best for you. I want to help you complete your goals. Then, you have a mutual interest and they're going to keep coming back to you and want to work with you.
Right. I want to take the conversation towards, regulation. And one of the major regulations right now that are coming on is the NAR settlement. And no one really knows what to do. So I just want to hear it from a loan officer's perspective. What do you think of the settlement and like how you think it would affect the business?
Yeah, so I know there's a lot of confusion for buyers, for realtors. The buyers are like, wait, I have to pay, 3% now that previously, a lot of people don't know this either. So the buyer's agent in the past has always been paid by the seller. They pay the seller's agent 3%, and the buyer's agent 3% is the industry standard. With that NAR settlement, now actually it's the buyer's responsibility to pay that 3%. However, it looks like in most transactions, the seller is still going to pay that 3%. And then a lot of realtors are asking, if they pay my 3% agent fee, is that going to be counted as seller concessions? My understanding is that that's outside of the loan or the transaction, so it's not counted as seller concessions.
Right.
So really nothing is changing. The realtors need to disclose upfront that they charge a fee, because a lot of the times the borrowers weren't even aware of it, because it doesn't affect them. The seller is the one paying it. Now they need to disclose that up front, and then actually the client has to sign an agreement saying, they understand, and then it binds them to the realtor. Now, anytime you want to see a house, they have to sign this agreement. So that doesn't necessarily mean you're tied to that realtor forever, but if you want to see a house with them, you have to sign this agreement, understand you're going to be responsible for that 3%. Although I don't think that anytime soon, they're going to be responsible for actually paying it. I think the seller is going to continue to pick it up.
Right. And I think, just as you said, the transparency that it brings to the relationships between the buyer, seller, the realtor.
Right. So yeah, that's another thing, is theoretically it's going to create more competition because you have to disclose that 3%. So the person who's selecting their buyer's agent could say, well, I'm not going to pay 3%. I'll pay you 2%. Right. Or, they can have a competitor come in and say, I'll do 1.5%. Right. So it's supposed to kind of lower those fees, which I know a lot of realtors are nervous about. Obviously, it's affecting their commission. So I understand that, but yeah. I don't think it's going to be a major change. Maybe it's 2.5% instead of 3%. But that already happens on larger transactions. Like if you're selling an $800,000 house, you might not pay 3% to each agent. You might pay 2% because it's such a large amount. And that's something you can negotiate anyway. So
Right. And I think the best realtors are going to win. Like it's not going to change much. Yeah.
Right. I guess it depends on the buyer. Some people are really, really sensitive to, cash. If they're really limited on cash and they end up needing to pay for the buyer's agent, then maybe they'll go with the agent who has a lower commission. But a good agent is going to make up for that because of their negotiating skills, finding you the right property. They're going to save you the 3% that, even if you had to pay it, they might end up saving you that 3% by getting you seller concessions or getting you a good deal. So I think it'll be worth it in the end, but definitely the best agents are going to succeed, just how it is now. You know what I mean? Yeah. A few agents do most of the business in the market because they're the best. They're the most successful, and they're going out there and getting it. So.
And you mentioned agents and loan officers. Can you talk a little bit about the relationship between agents and loan officers, and maybe even mortgage brokers as well?
Yeah, so a mortgage broker is a loan officer. I'll start with a difference there. So usually a loan officer works for a bank or credit union. They're kind of limited on their options. They go through that financial institution for all their loans. A broker works with multiple different lenders, so we have some more flexibility in terms of rates and pricing and different programs. Like we can work with self-employed borrowers. We have some down payment assistance options that banks or credit unions don't. As far as the relationship between lenders and realtors, it kind of works both ways. So I have realtor partners that, they get somebody who wants to look at a house. Most of the time, they're not going to show them a home unless they're pre-approved. So they send them to me and say, hey, go get a pre-approval. Then we can start looking at houses, or vice versa. I call leads, or I get a referral. Somebody who's a young kid and a first-time home buyer just wants to buy a house. They've got their, money saved up and all that. I get them pre-approved. Then I might connect them with one of my realtor partners and say, this guy's going to take care of you. He's going to show you a bunch of houses and find you what you need. Or sometimes I'll give them a couple of realtor partners and let them pick who they connect with the best. So that's kind of a two-way street. And that's another, It depends on the loan officer, but that's how I do a lot of my business is realtor referrals and showing them, mortgage brokers, we're usually capable of closing a bit quicker than banks or credit unions too. Right. Our company average on a conventional loan is about 17 days from submitting the loan to closing. Yeah. Bank or credit union is probably 30 to 45 days. So we're quite a bit faster, which helps the realtor because when they submit an offer, most of the time you have the closing date 30 days out. If they can do it 20 days out, that gives them an edge in their offer, and they may get more accepted offers, and also just the confidence that, I'm going to get it closed for you. Like if I tell you I got a pre-approval, I'm going to close it. You don't have to worry. Yeah. Some lenders hand out pre-approvals willy-nilly. They're like, oh, yeah, you're good. You make the offer, get the offer accepted, and then.
Exactly. Like if you do good pre-approval, then the later approval stage is going to be much easier because you've done your homework.
Absolutely. And I try to collect all the documentation up front. So, I'm getting pay stubs and bank statements and all the W-2s, all the stuff I need to verify. And I run it through the computer, what they call automatic underwriting. So I run it through the computer to make sure it's going to get approved. And then I'm much more confident in my pre-approval. Yeah. That helps me as well as the loan officer. When I have a client submit an offer on a house, so the realtor will call the listing agent, say, hey, we got an offer going in. I'm going to call the listing agent too and tell them, I've already looked at the client's, finances, income, assets. We're good to go. We're going to get this closed in a couple weeks. If you accept our offer, it's going to be a smooth transaction. So sometimes that's a deciding factor when they have two offers in hand, the same offer. If I can give them that extra bit of assurance, that might make the difference.
Right. So it sounds like it begins and ends with the loan officer.
It does more or less. The realtor, like I said, they have clients that want to see homes, and they connect. So they start there, and usually the realtor is going to swing them back to me before they actually can see the home. But a lot of the leads I get actually come from realtors because people don't think, oh, I want to go get a loan. They're like, I want to get a house. You know what I mean? Right. The house is the first thing on their mind. So.
Exactly. Like they care about the outcome. Yeah.
Right.
Yeah.
Right. And then, they want the house and then they're like, oh, I need a loan to do that. Okay. How do I do that? So
exactly.
That's where I come in and educate them and get them on the right track.
Yeah. Yeah, exactly. I mean, like the business, I would say for a borrower, like you have to learn if you're a first-time borrower, like it can be intimidating as well. You're having to learn all these things. How do you, as a loan officer, how do you deal with first-time borrowers and just like help them learn all these things?
Yeah, I mean, that's another advantage of sitting down in person because I kind of walk them. I actually have a step-by-step, sheet that I print out and go over with them as far as the pre-approval, making offers, inspections, appraisals, the documentation, closing. Like I try to go through each step without getting too in-depth and too complicated because I don't want to just overwhelm them and confuse them. So I just try to give them like an overview. I say, do you have any questions? If they do, we'll dive into certain subjects more. But for most first-time home buyers, they're just like, how much is it going to cost? What is my monthly payment? Yeah. That's their main concerns. What's the interest rate? Everyone's concerned about interest rate. So that's kind of the main things they're focused on, but I do try to give them an overview of the whole process and just make sure they have a general understanding of how it's going to go. This is step one. Once this is complete, this is step two, so they know ahead of time, and I'm not, surprising them with anything or coming out of left field.
Exactly. So that's, you have your own playbook that you go by.
Right.
Right. And like that's what all this podcast is about, like the loan officer's playbook, trying to see like which strategies, real insights. I think like when other loan officers hear about this and they say, oh, well, maybe I should implement something like this. I should have stronger relationships with my borrowers.
It makes a huge difference, and they really appreciate it most of the time because, like I said, people just want the house. They don't, they might have never had any experience, never had a car loan. Never had a personal loan. They might have a credit card, and that's their only experience. So sitting down and actually explaining how it's all going to work. And another question they always ask is, what about the taxes and insurance, and explaining the escrow account that's going to be taken care of for you. You just make that one monthly payment. And so that's another big one that they always have questions on.
Right. Can you tell listeners like what an escrow is? Like, I don't think a whole lot of people would know that.
Yeah. So generally, you don't have to have an escrow account set up on a conventional loan, but government loans, so FHA, VA, rural development loans, you will. Most conventional loans, we do set up an escrow account. So essentially what that is it's going to have all the money you need for your property taxes and your home insurance for the year.
Right.
The lender, the servicer of the loan, holds on to those funds and they disperse them. So usually it's broken up into summer taxes and winter taxes, or city and county taxes they're called.
Yeah.
They will disperse those when they're due. So let's say your city taxes are due August 1st. It's going to come from your escrow account that you set up at closing. So that's a big chunk of your closing cost, is a year of property taxes, a year of home insurance. They're also going to usually set up a buffer of 2 to 3 months for each of those. So since your taxes and insurance almost always go up every year, it's
Right.
insurance always goes up, taxes always go up a little bit. So they have a buffer so that all of a sudden you're not short, $5,000 in your escrow account, and your payment goes up $300, $400 a month.
Right.
That can happen if the escrow account is not set up correctly. So that's an important step. But essentially, when you make your payment every month, a small portion of that gets set aside into that escrow account so that it can replenish. And when your taxes or insurance are due again the next year, they can pay it for you in full. You don't have to make any extra payments or pay that yourself out of pocket.
Right.
It all just comes out of that mortgage payment.
So it's a little bit like an insurance, pretty much.
Yeah, a little bit.
Yeah.
Basically just gives you some peace of mind so you don't have to worry about it. It's one less thing you have to take care of. They're gonna do it all for you. And when people's mortgage payment goes up, if you have a fixed rate, your mortgage, your principal and interest are not ever going to go up. They're going to be the same.
Yeah.
That amount is the same, but the taxes and insurance can increase. So that's where your mortgage could increase.
Yeah.
And I try to make people aware of that too. That's something a lot of first-time home buyers haven't experienced, is the property taxes will be reassessed, and it'll be based on the home's value. So if somebody had bought that home for $100,000 10 years ago, the taxes are capped. They can only increase so much per year. If you buy that home at $200,000, it's going to be reassessed by the county assessor, and those taxes can see a spike or a jump that next year. So usually taxes are going to jump a bit, but that's what that buffer is built in there to help you, expect that and not all of a sudden have a huge increase in your monthly payment.
Right, exactly. So Jordyn, as someone who's been in the field, what advice would you give to an 18-year-old who wants to get into the lending business, who wants to become a loan officer? Which steps would you advise them to take?
Definitely get educated. There's a lot to learn. It's always changing. Learn a little bit about the process of getting licensed. So if you're going to go to a bank or a credit union, you actually don't need a mortgage originator's license, at least not in Michigan. So you can actually close loans there. The pay is a little bit different. The structure is a little bit different. But if you want to be like a broker or, an independent loan officer, you'll need to get licensed. That's going to require some online courses. I think it's like 20 hours of online courses. That's going to vary by state as well. And then you need to take a test. It can be a little bit challenging. Some people, got to take it 2-3 times to pass. So definitely study. You do practice test, all that stuff. But if you're interested, the best thing to do is to talk to somebody in the field and, get an idea of what the day-to-day is like. If you really want to do that, they can guide you along and maybe even set you up with a job.
I know you're in the business and you like to create relationships. As a loan officer, what would you say to someone who's trying to buy their home, first-time home buyers? I think in the audience, we're going to have some first-time home buyers, some millennials who don't really know a lot about the process, and they want to reach out to someone who's trusted, someone who can do due diligence with them, but really good due diligence, and then explain the process to them. So how would listeners reach out to you?
For me personally, you can go to our website, Heartland Home Mortgage. I'm sure, you have my contact info. I don't know if you can include that in the details, but also Mortgage Matchup is where you can find mortgage brokers. It's a website, basically puts the best brokers in your area based on zip code. Right. That's another good one. So that's probably the main tools I would use. A lot of people just go to their bank or credit union. A mortgage broker, 9 times out of 10, is going to be able to get you a better deal, a lower interest rate, and lower closing costs. So I definitely recommend a broker because, like I said, they can shop with multiple lenders, similar to like an independent insurance agent. So if there's an insurance agent who can shop at 10 companies instead of just one company, they're going to be able to find you a better deal.
And where do you see the mortgage lending industry going in the next 5?
I think it's going to get really busy. I think as rates come down, refinances are going to be booming again. A lot of loan officers have left the industry in the last 2 to 3 years because rates were high and business slowed down. It was more purchase heavy, not as many refinances. Refinances are easier because there's not, the buyer, the seller, the realtor. It's just you and the loan officer. And, there's not like a deadline in the purchase agreement. It's a little bit easier, less documentation. So a lot of loan officers just jumped in because rates were so low. There was a million refinances and everyone, can make money. So as it got a little bit harder, they left. I think we're going to start to see those refinances come back and probably more loan officers joining the industry.
Yeah.
And I think it's a good time if you're trying to jump in. I mean, now is the best time. Get in right now. Get experience, get 6 months under your belt, and then when rates do come down and you're super busy, you're going to do well.
Right. It seems like the job involves a lot of, document review, looking at purchase agreements, W-2s. Have you found any tools and technologies that you think are helpful to you, and do you think they would be helpful to other LOs?
Yeah, so one of our lenders actually has some AI software. You basically upload all the documents. It'll kind of walk you through. You answer yes or no questions, and it'll pull out like dates and dollar amounts for you, and then you just verify it. The computer does a lot of the calculation, so that kind of prevents some of the human error. But at the end of the day, you're still going to be looking at documents and making sure things are correct, and kind of crossing the T's and dotting the I's. That's part of the job. So.
Right.
That's not the fun part. It's more fun to go out and get new clients and talk to people, but it is part of the job. So
yeah, that is true. So we're new in the business. We do help with due diligence. We do help with AI agents with due diligence. We do help with managing follow-ups and a little bit about document review as well. Okay. But I think from talking to all of these loan officers, it's all about creating relationships. It's all about the referrals that you get. I've seen brokers and lenders where 100% of their business is all referral based. I'm like, wow, don't you want to do like ads and stuff? And they're like, no, we've built our reputation over the last 20 years. And now we have generational, people coming in there. Well, like things like that.
Yeah, I think there's room for both. I mean, you can always pick up a couple like cold calling or Facebook ads or whatever it might be. Yeah. You'll definitely get leads off of that, but it's more a higher close rate for sitting down in person with someone that was referred to you because there's not as much competition. They already have some built-in trust. Somebody's told them you're going to do a good job. So I definitely think that's better, but there's room for both.
As a loan officer, how do you see AI coming into play in your process?
Yeah, I know. I mean, a lot of people are worried AI is going to take jobs and, you're going to be out of a job. I don't think that's the case. I think people are always going to want to have that personal touch and someone to talk to face-to-face. AI can definitely be a good tool for loan officers and agents and everyone in the real estate industry just to make things easier and catch mistakes and kind of speed things up and, less headache. But at the end of the day, I think it's going to be people using those tools that are successful.
I like talking to young people in mortgage lending. As you know, the average age of a loan officer is like in their 40s or 50s. So how do you, as a young person, how do you navigate the industry?
It is a little, same with insurance, it's a little bit challenging being younger because, you're talking to clients in their 30s, 40s, 50s, and they're like, oh, this young guy has no experience, doesn't know anything. So you really got to be on your game and know your stuff and be educated. And, you want to avoid any hesitation to work with you just because of your age. If you show them, I know what I'm doing, like, trust me, I'm educated, I understand the process. That kind of instills some confidence in them. I think I'll be set up pretty well.
Yeah. I think because over time that, as you mentioned, a lot of people left the business. So that created like a gap. So people in their 20s, now's the best time to come in. So by the time you're 40, you're a veteran.
Right.
Thank you so much, Jordyn. This was a really insightful conversation. You mentioned where listeners can reach out to you. I'm going to put Jordyn's information in the notes and in the description. Awesome. Thank you so much. Thank you, everybody. This was the first episode of the Loan Officers Podcast. Thank you for coming, Jordyn, Tyler, and I'll see you all in the next one.